Finance is going to move from back office to really front of house competitive advantage. The industry is getting more scrutiny. Investors, lenders, landlords want to see clean books and real projections.
Welcome back to CFO Weekly, where we're talking with financial leaders about how to build efficiency in their teams, create time for strategy, and ultimately get results. This podcast is brought to you by Personiv, the trusted leader in finance and accounting outsourcing for over 30 years. See how Personiv's customized solutions can help you streamline your operations with teams that start as small as one. Visit the website at personiv.com to learn more. I'm your host, Megan Weis. Let's jump right in. Welcome back to CFO Weekly. Today I'm joined by Ann Napolitano, CEO and founder of Ann Napolitano Consulting, a firm dedicated to helping food and beverage businesses gain clarity, control, and confidence in their finances. With more than 2 decades of experience in corporate accounting and financial leadership, Ann previously served as controller for the U.S. operations of Hermès, where she led financial reporting and operational oversight for a globally recognized luxury brand. Ann is also an accountant turned chef turned accountant, which allows her a unique combination of industry plus finance experience. Today, we're exploring how finance can move beyond bookkeeping to become a true operating partner, particularly inside food and beverage businesses. From understanding margins and managing cash flow to making smarter growth decisions, we'll talk about how financial insight can help operators not just survive, but scale with confidence. Ann, thank you for joining us today on the show.
Oh, thank you very much. It's a pleasure to be here.
So you've had a unique journey from corporate finance at Hermès to running your own business and now advising food and beverage operators. What was the moment that made you realize that this industry needed a different kind of financial partner?
Honestly, it was when I started talking to restaurant and bar owners and kept hearing the same thing. My accountant just does my taxes. They really don't get my business. Sometimes they just speak to them once a year or twice a year. The industry runs on thin margins and long hours, but financial support really hasn't caught up with them. And I knew that I could help bridge that gap because I've lived on both sides of it.
And having sat both inside a luxury brand and inside small businesses, what fundamentally surprised you about how differently financial discipline shows up?
Well, at Hermès, financial discipline is baked into every single decision that they made. Systems, processes, reporting. We had to answer to the parent company in Paris. So there was a lot of structure and a lot of rules and requirements. But with restaurants and bars and the food and beverage industry, you often have talented people that are making decisions based on gut feel and a bank balance. I see so many operators just looking at their bank statement and thinking that's how well they're doing or how well they're not doing. It's a surprise how much of a competitive advantage that having solid financials can be in this space. And that's why the operators love them. And that's why our clients are really happy with the service that they get.
And am I right that you were a chef at one point?
Yes, I was a chef. I took some time off after I had my kids and then went into doing that for a bit and really enjoyed it. I love to cook. I still love to cook. It's a passion of mine. And that really resonates with my clients. I have one of them that says that was the reason and is still the reason that he stays with us is because I understand the business so well.
And when you first start working with a restaurant or bar, what are the most common financial blind spots you see?
3 really big ones. Payroll as a percentage of revenue. Most owners have no idea where they stand on that. Untracked comps and voids, those chew into margins and people don't really see them or understand them. They may not be on site all the time, and so they're really not aware of the comps that are being given out. And then also cash flow forecasts. Everyone is looking at their P&L, which is showing them what they did last month. But what they really need to be doing is looking at the next 90 days.
And payroll, is there like a percentage companies should be targeting? And is that true across every restaurant or does it differ depending on what kind of restaurant you run?
It really varies by concept. Sometimes you have fast casual, so you have less staff. If you have full service restaurants, you'll have more staff. It really depends on the type of restaurant.
And a lot of operators think they understand their margins, or maybe a lot don't, I'm not sure. But in your experience, where are they most often wrong?
Generally, we find that they really haven't accounted for labor, waste, shrinkage, or the overtime that they've approved. They don't really understand how it all plays together. True profitability is a full picture number, and most operators are working from a very partial picture.
And you mentioned cash flow, but that's obviously very important and one of the biggest challenges in this industry. What are operators consistently underestimating?
The timing gap generally is what we see. Revenue looks fine on paper, but cash is tight because they paid suppliers on Tuesday, payrolls on Friday, and then the weekend comes and that's when the revenue comes in. Generally, Monday and Tuesday is when they see a lot of cash coming into the bank. So they haven't taken that into consideration. And we help them plan out the timing gap, when to pay vendors, taking advantage of the terms that they're given from their vendors. And all of those things really can help out and make a huge difference.
And I'm sure a lot of the people that you deal with as restaurant owners probably don't have much of a financial background. So how do you teach them about finance and what they should be looking for? How do you help them be a little more fluent when it comes to finance and accounting?
What we found is that by giving restaurant operators financial statements, it doesn't really help. They don't want to ask the questions because they don't want to appear that they don't know what they're talking about. So what we found is that dashboards, graphs, charts really help paint the picture and show them exactly how well they're doing. And it helps them understand how well they're doing. So that has been a real game changer for us. We started doing that in the last 2 years or so, and it's made a huge difference. We try to schedule a meeting once a month with our clients, and then that's when we review the dashboard and the reports with them.
They say a picture's worth 1,000 words, and I believe it.
Absolutely true. It really is true. We have found such a huge difference since we started doing that. Really a game changer. We've used some AI for some of that, helps us pull together some of the numbers. But those graphs really show, if we can explain to them seasonality, right? Dips, we compare this year to last year so that they can see what's different. And then we try to identify what the changes are. Why is this year different than last year? And then explaining seasonality to them so that they understand that they're coming into their busy season or they're coming into their slower season so that they can be prepared and we can help get them prepared.
And this is just a question that I'm curious about, but like consumer confidence, have you seen it impacting restaurants across the board this year? It feels like the it's just a weird time. So I'm just wondering how you see consumer confidence playing out.
It certainly is an uncertain time, but restaurants have seen uncertain times in the past 6 years, right? We've been through COVID. We've been through so many things. Yes, we have seen that a bit, but strong restaurants still remain strong. One of the factors that we've noticed lately is less alcohol consumption. So that's been a game changer for some of our clients. We're noticing that in the bars or in the bar of a restaurant. And restaurants depend on the margins that they get from alcohol sales. So they've really had to change things up. Mocktails can help offset some of it, but not completely. And we've really noticed a big change in that.
Read about that, like younger people, just not really their thing.
It's true. It's very true. We've really seen that in our clients.
And if you had to pick one metric that every restaurant owner should be obsessing over weekly, what would it be and why?
We tend to look at prime costs, which is the cost of goods sold plus labor as a percentage of revenue. It's the one number that really tells if your business is structurally healthy. If your prime cost is consistently at over 65%, you have a problem somewhere and we need to help you find it fast. Most owners check it monthly at best, but weekly is better, where you can catch small issues before they become big ones.
And for a business that feels busy but isn't profitable, where do you typically start with them?
I go straight to the profit and loss line by line and ask, does this number make sense? 9 times out of 10, there's either a labor issue or a purchasing issue, and sometimes both. Busy doesn't equal profitable, right? You can be slammed every Saturday night and still be bleeding money if your cost structure is off. We fix the structure first, and then everything else starts to work. One of the things that we found with a few of our clients is that they would come up with menu pricing based on their costs of materials, costs of food. and not really take into consideration the cost of labor, the cost of rent, insurance, all those other overhead costs that come into play. They weren't even taking that into consideration. They were pricing things just based on how much the food was costing them. And once we explained to them that they weren't even covering their costs, we made them adjust the menu pricing.
And at what point does a food and beverage business need to move from just basic accounting to like true controller level support? Like how big of a organization do you need to be to need that controller level support?
We generally find it's when the decisions get bigger than the data you have. If you're opening a second location, negotiating a lease, or thinking about outside investment, and you're still running on QuickBooks and a prayer, that's the signal. Other signs, multiple revenue streams that you can't see clearly. Your bank balance and your P&L don't match, right? Or you've had to make a big decision and realize that you didn't actually know your numbers. But we've also found that some restaurant owners, when they're getting started, think that they can do this on their own. And we've had a couple of clients that it's cost them tremendously because of that choice, because they didn't set things up correctly and didn't understand what they needed to do. So I really think it's important to reach out to somebody who understands finance and accounting to really get their advice as you're getting started. It's well worth the investment.
And I'm sure these days with like the third-party delivery apps, and that just complicates things a lot more.
Absolutely.
And you offer a 3-tier model. So how do you guide clients on when it's time to step up into FP&A and more strategic finance?
I generally ask one question. What decisions are you trying to make that you can't make confidently right now? If the answer involves forecasting, budgeting, scenario planning, or investor conversations, that's the FP&A tier. Most clients start at the foundation, get the books clean, and they're reporting consistent, and then want to move up because they can finally see what's possible with good data in their hands. We just signed a new client today, actually, and she went with the highest tier because she really wants that strategic advisory type services. She feels that that's what she's missing in her business, and she really needs it and wants it.
And in your mind, what separates the operators who successfully are able to scale versus those who just stay stuck and stagnant?
I think it's the willingness to let go of the idea that they have to know everything themselves. The operators who scale bring in the right support, trust their numbers, and make decisions proactively instead of reactively. The ones who stay stuck are usually doing too much, including the finances, and they never quite get ahead of the business. Scale requires systems, and systems require a bit of faith in the process. And it's also, I think it's quite a relief once they have an expert with them that can help them along the way.
True. I mean, if you're just doing everything yourself, it's impossible to scale.
Absolutely.
There's only so many hours in a day.
You're 100% correct. We talk to them about what keeps them up at night, and that usually points them in the right direction as far as what they need and what kind of support we can give them and the advice that will help them grow.
And you talk about taking financial stress off the plate. So what does it actually look like when finance becomes a true partner to an operator and not just a bookkeeper or scorekeeper?
When I'm a true partner, clients call me before they do things, and that really makes a huge difference. When they're going to sign a new lease, talk to me first. Talk to me when you're about to have a new operating agreement with your partners. Texting me about vendor changes, things like that. The scorekeeper tells you what's happened, but a partner helps you figure out what's next, and that's the difference.
And we talked a little bit about dashboards, but how do you build trust with founders who may not naturally gravitate towards financial data?
That's a big one, definitely. I meet them where they are. I speak the same language as them. I understand what they're going through, and that's a big difference. Talking to them with a pitch deck and slides, that doesn't help. And they don't understand it, and it frightens them. They don't feel that level of confidence to have that conversation. But I can show them what the numbers are and what's important and help them solve problems and see that finance can actually answer questions and help them for the next steps. Numbers stop being scary then.
And your background as both a chef and an accountant is rare. So how does that change the way you advise clients compared to a traditional firm?
Well, I've been there, so I understand how things work. And so I can understand the reality of the situation. We're not just on the outside looking in. We really get what they go through. And I can understand why things have happened. And I can talk to them in a language that they understand. Traditional firm might give you correct advice, but just disconnected from how the business actually runs. And I try to bridge that gap and just be there as a sounding board. Sometimes I feel like I'm a financial therapist.
And I'm curious, were you a chef first and then an accountant, or an accountant that took a break to become a chef and then went back to accounting?
That's the way it happened. I was an accountant first, worked at Hermès, worked in some other corporate positions, and then took a break and did my chef work for a while and then came back to it. I started my firm 10 years ago. We just celebrated the 10th anniversary. And so when I started it, we were general practice and taking on all different types of clients. And then in the past 5 or 6 years, we started really honing in on the food and beverage space and defining our niche. And it's really been a game changer for us. And I enjoy it. I really love working with the people in the food and beverage industry. They get it. They appreciate it as well. So it's been a win-win.
And you use a dedicated 3-person team model. And why is that important? And how does it change the client experience?
For us, relationship continuity matters. When you call us, you're not explaining your business to someone new every time. You have a team that knows your vendors, your seasonalities, your quirks, all of it. The context is where the real value lives. This week, I have one of my managers is out on vacation. But there's 2 other people here that understand all of her clients as well. A lot of firms cycle through clients, move the clients to whoever has bandwidth. We deliberately don't do that. You are assigned team members and you'll always work with them.
Yeah. So important is like that relationship and feeling like someone knows you as a entity and a person and whatever else that relationship brings to the table.
We understand their business. We know their vendors. We know their customers. We know the types of issues that they've had in the past and what's coming up for them so that they reach out to us when things are changing. And that's really important that they feel comfortable like that, making that call and saying, we're struggling with X. How can you help us? Or we're planning on a new investor coming in. What do we need to do? And sometimes we don't have all the answers, but what we do is we make sure we partner with other people so that we can refer our clients because they trust us. The clients do trust us. So we have tax partners because we don't handle tax. So we keep tax accountants on call so that we can refer our clients and we make the process seamless for them. It really works well.
And let's talk about technology because, every conversation these days was not complete without that topic. But how are you seeing technology and automation change the way that restaurants manage their finances?
I'm very excited about some of these opportunities that are presenting themselves with new tech. We are very tech forward and we try to take advantage of as much tech as possible. Tools like QuickBooks Online and Gusto, and some of the newer POS integrations are automating some of the data entry. Doesn't always do it right though, but it does help to save some time, right? AI is starting to bring some insights, right, that would have taken hours to pull manually, but the technology is only as good as the humans interpreting it. We're seeing QuickBooks Online, their automations and their AI are much worse than they used to be. So we need someone to be taking a look at things and making sure that everything is done correctly. We can't provide good financial information and our dashboards and those graphs and things if the data is not correct. So that's where we come in to make sure everything is good, the foundation is solid, and then we can use AI and other tools to give advice.
And I'm curious, are there platforms out there that you're excited about? Like I know there's Restaurant 365 and I think one called Margins. What do you advise that restaurants use? Is it still QuickBooks?
For the most part, most of our clients are on QuickBooks Online, and we've made it so that it works well. We understand how to use it so that we can get the information we need. But then we usually add on things on top, different types of reporting software. One of the ones that we use is Reach Reporting. And it does a very good job at helping us work with budgets and forecasts and creating the dashboards that we use. Margin Edge is another one that we've used in the past. So some of our clients are on that platform as well. And we've actually just met with someone about a new platform that's just getting started. I don't recall the name of it, but they're trying to compete with Margin Edge. So we try to stay in the forefront of all of these different types of tools so that then we can give them the information that they need and help them interpret it. But that's the key, is knowing the types of questions to ask and which tools to use. Otherwise, you get overwhelmed, I think. There's so many options out there. But Claude is great for an AI piece of it. We've been able to use that for a variety of things.
And if you were advising a new restaurant owner today, what would you tell them to get right from day one financially?
3 things. Let's say separate business and personal finances immediately. Know your prime costs before you open your doors, and build a 90-day cash reserve before you launch. Most new operators are so focused on the concept and the build out that they forget that they're building this for the long term. Get the foundation right early, and it's so much harder to fix later.
And when you look ahead, how do you see the role of finance evolving in the food and beverage industry over the next 2 to 5 years?
I think finance is going to move from back office to really front of house competitive advantage. Operators who use real-time data forecasting as opposed to just looking at it as a bookkeeping function, making proactive decisions, they're going to outperform the ones who are just running it on intuition and looking at their bank statement. The industry is getting more scrutiny. Investors, lenders, landlords want to see clean books and real projections. We have franchise clients and they're required to report their financials by the 11th of the month. It's a very tight deadline, but you need to have good numbers or you suffer consequences from the franchisor. So you need to treat finance as a strategic tool, not just a compliance requirement. And they're going to be the ones that succeed. And you can succeed really well in the food business, but you need to take care of all of these small pieces.
I think finance and accounting it's an exciting place to be these days. It's like a true strategic partner to any business.
100% agree. But it's also us trying to get that point across to restaurant operators. They don't always see the value of it. And we're really trying to show them what a difference it can make if they talk to us in advance of things as opposed to coming to us after the fact, or if they partner with us and really take advantage of either the controllership side of things or the FP&A level, that we can provide so much more value than just a basic bookkeeper.
Thank you so much for being my guest today on the show. I've really appreciated having you here and you sharing your insights with us.
Well, thank you so much for having me. I really enjoyed it.
And to all of our listeners, please tune in next week. And until then, take care.
You've been listening to CFO Weekly, presented by Personiv. Please subscribe wherever you get your podcasts to hear all of our episodes. Want to learn more? Check out personiv.com. Thanks for listening.